Become a wealth creator today. Text VISIT to 800-454-1184 to schedule your 15-minute call with Eric and his team. That's VISIT to 800-454-1184.
Our national debt is on a nonstop upward trajectory. Government leaders and members of Congress just continue their debate on what to do about spending and the debt ceiling. What does all this mean for you? Eric has some thoughts on that, and he's going to be sharing those with us today. Thank you so much for joining us. This is Wealth Creator Radio with Eric Heckman. He and his team are located right here in Silicon Valley, and they've been helping people have remarkable retirements for over 30 years now. And Eric's goal is to help you weather almost any economic storm. So let's start off by getting you the phone number, because I'm sure you'll want to call with questions. 800-454-1184. You can even text the word visit at this same number, 800-454-1184 for a complimentary appointment. You can also get our complimentary toolbox, which includes Eric's book, Worry Less Wealth, plus some really valuable educational materials that you won't want to miss out on. Easy reads. All you have to do, text the word toolbox to 800-454-1184. And find us online anytime at wealthcreatorradio.com. Eric, hello to you.
Hey, Luann. Yeah, it's that time of year, I guess, or, well, I don't know if it has a certain time of year necessarily, but the political cartoon and charade of, hey, we're hitting our credit limit, let's raise it. Right? And unfortunately, there's not much talk about what should we do to reduce spending or any of these other things. And it's kind of a silly thing where they say, okay, we can't spend only this much until once we hit there, we have to all fight and battle over it and then raise it again.
Right.
And there's really not much difference with either political party. One of the things that we often show is actually the national debt clock in a lot of our live events. And I saved the one from 2017 where it was at 20 trillion.
Yeah.
And, and then after the Trump term, it went up to almost 27, and then now it's over 31 trillion.
Right.
And so that's a huge increase in just, not even, it was actually in October 17. So we're not even talking a full 6 years or 5.5 years. It went more than double, or more than 50% increase, I should say. And so, that's a big jump and something to be concerned about, because how are they going to pay that back? Well, they either have to, like any of us, cut expenses or make more money. And the only way they make more money is raising taxes.
Taxes. Us. We pay for it. We pay for their mistakes. And, it's so funny to me, Eric, because we are all responsible citizens and we try, most of us try to, watch what we spend, watch our spending and actually budget where they don't. And I just can't believe they're just not a good example for all of us. And then we in turn have to pay for everything. So this is something that Capitol Hill talks about all the time. It's kind of their stuff, but it does impact the average citizen. So why don't you break all that down for us, please?
Well, if it does get to crazy levels where they, shut down the government and stop paying people, we saw that several years ago where all of a sudden, a lot of government workers didn't have incomes and they're still supposed to go to work. And,
I know.
That's not very nice.
No.
And of course, they don't have money to go out in the economy and buy things and do things. And so that it does wreak a lot of havoc on things. It's always a short-term issue, but it does, affect the stock market, affects a lot of things. Again, usually it's over after a month or so, but these are things that we don't need to have happen, right? We have enough real things, enough real emergencies versus, kind of really just political made up emergencies is really what these are.
So what about the impact on retirees then specifically, Eric?
Well, I mean, one of the things that, of course, they're not talking about is how to fix Social Security and, around 2035, 2036, 2034. It keeps bouncing around the last several years, but at some point they're not going to be able to pay for 100% of their benefits, only about 80%, which is kind of leaves you going, okay, well, then what do you do? Mm-hmm. And nobody really knows yet. And so that's one of those things where it used to sound like a long, long time away. And now that's pretty much within 10 years, just about. That's something that they really need to be working on. And that's stuff that is going to get critical. But yeah, we don't see them talking about that. We just see them talking about these short-term little gimmicky things. And And so that's something where, again, you have to build up your own independent lifetime income. You have to have your own sources of income that's not government dependent. That's not obviously going to be your pension, because most of us don't have one, right? So you got to go out there and create your own. And, that's one of the things that we can help people with. And we have this process called creating the blueprint to worry less wealth. And really what worry less wealth means is, if you don't have to worry every day about, am I going to be okay in retirement? Am I going to have a check coming in? Does all this government stuff affect me that bad? Right? All these things. And so, that's where we're trying to get you to. We've got some quick reads up there of like, how long will your money last? Are you paying too much taxes in retirement? Social Security decision about when to turn it on. And of course, my book, Worry Less Wealth. So, again, this is a great free digital toolbox that we've set up and created for people just to download on their own. So all you have to do is text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184, or download it directly at wealthcreatorradio.com.
So we're talking how the federal government keeps spending, and the way it's going to pay its bills are to obviously tax us, the citizens. What kinds of questions are you hearing right now, Eric, about tax increases?
Well, they're guaranteed. And, a lot of times you can't technically say that, but the Trump tax laws go away at the end of 2025, which that's 2 years from now.
Right.
Right. So
yeah.
You got 2.5 years left of low rates. This is a huge opportunity. I mean, this is an opportunity that people don't get very often. With the market still being down some and the taxes we know are going up. Oh my gosh, this is such a great time to be doing some changes to your portfolio, doing some maybe Roth conversions, looking at saying, let's pay some of that tax now and get rid of that tax for the rest of our life. That way the government can't go back after that pot of money because it's tax-free now. And so there's some great options. Also, with the interest rates hikes that we've had, some of these guaranteed products, I mean, they can earn up to double-digit returns without risk and without cost. I mean, this is the time really for a lot of people to be going, whoa, I need to do something. I need to take advantage of it. You don't go shopping. You don't wait till the sale ends to go to the store, right? And buy your clothes or whatever. If the sale's on, you want to get it right then. If the sale's about to end, you rush out and get whatever you need before those prices go back up. And that's what's happening right now. And so it's kind of crazy how great things are, even though people always talk about all the bad stuff. Things are really, really good right now, and this is one of the best times to take some action. So you should be doing some tax planning. And if your financial advisor doesn't know taxes, isn't licensed to do tax advice, oh my gosh, you need somebody who knows how to do taxes. So
exactly.
That is such a critical thing for us right now. So that's one of the things that we do here at Heckman Financial. We can actually create that blueprint to worry less wealth, which, there's no cost, no obligation. We just set up a 15 to 30 minute phone call, find out what's going on in your situation. And then if it makes sense, we go through that income plan, that investment, tax plan, healthcare, and legacy plan. I mean, those income, investments, and taxes all are very intertwined. So you got to have a good plan that goes over all of them together. So again, if you want to set that up, all you have to do is text the word toolbox, 800-454-1184. Again, text the word toolbox, 800-454-1184, or book directly online at wealthcreatorradio.com.
We have to take a quick break, but we'll be right back with more from Eric. This is Wealth Creator Radio.
If something's worth doing, it's worth doing right. There's a particular time of life this phrase couldn't be more appropriate. How can you know you'll live the retirement you've always imagined? After all, life can be so unpredictable. You've worked hard and saved. Watch your accounts go up and down with the market. Your advisor says, don't worry, you'll be fine. But you still don't feel confident. Eric Heckman at Heckman Financial has a checklist to help you find out if you're on the right track for retirement. Take his checklist challenge. If you can check all the boxes with confidence, you may be ready for retirement. If not, Eric can help you address any potential costly mistakes. To get Eric Heckman at Heckman Financial's complimentary checklist, call or text LIST to 800-454-1184. See if you've got it right. Take the checklist challenge today. Call or text LIST to 800-454-1184. Firm offers insurance services. Investment advisory services offered through Heckman Financial and Insurance Services, Inc. Investing involves risk, including the potential loss of principal.
Hi, you're listening to Wealth Creator Radio with Eric Heckman, president of Heckman Financial. And he is here to guide you about retirement and finding that wealth that you need in retirement, having that successful retirement. You know, when you think about it, there are so many moving parts when it comes to preparing for retirement. When should I take my Social Security? When might I accidentally trigger higher taxes? Or what if I make a wrong move with my retirement savings? And there are so many decisions that can impact each other, Eric, that you could say that retirement planning is kind of like trying to figure out a Rubik's Cube, right?
Yeah, so certainly. And, those things can be tough unless you're a kid and you've got a lot of time to do them.
Well, I was going to say, were you ever any good at them? I would think you would be. You're a smart guy.
I think at one point whenever that was in the 80s, I guess, or something, when they were going, I was able to solve them after a while. But,
wow.
I think the neat thing nowadays is people do the artwork out of those. Those are pretty fun to watch. But
oh, really?
Yeah,
I don't know about this. The creative side of it. Okay.
Yep. I mean, it is one of those critical things to know about Social Security and see how that literally does fit in the puzzle of retirement, because it's one of the bigger pieces, and it's one of the ones that if you find out later you did it wrong, nothing you can do about it. So you want to do it right the first time.
Yeah, it's interesting you just brought up Social Security, because I wanted you to give us examples of retirement decisions impacting other areas of our plan. So Social Security.
Yeah, so definitely taking Social Security, at the wrong times can be bad. Probably the biggest one out there is before your full retirement age. So, if you're born 55 to 59, you're some version of 66 in a few months. If you're born 1960 and after, that's 67. But, if you are working or sometimes you say, oh, I'm not going to work. And so you stop working, people turn on Social Security, and then they get a good job offer or somebody recruits them to come back. And then guess what? Oops, hold it. You made too much money. And once you make over about 21 grand, they start taking $1 for every $2 that you make over that amount.
Yikes.
So for most people, once you make about 60, 70 grand, all the Social Security will get paid back, and you'll keep that penalty for starting too soon. That can be a big mess. And so, you definitely do want to watch that. And probably the other one that I see a lot of, it's a little bit sneakier, is is a lot of times people will either sell stuff or they'll do a Roth conversion and they're over 65. Well, that shouldn't be a big deal, right? Except for this is what sounds like a nice old lady, Irma. But she's not. So
she's not nice.
So Irma is this calculation for a monthly adjustment to your Medicare premiums, and if you make too much money this year, over around 191, then you might start paying 40%, 100%, up to 240% higher Medicare premiums based on your income. And so again, that's something where this tax thing or that tax thing hits and you did something and it doesn't show up on a tax return. It shows up not right away, but it shows up a lot later. And so that's one of the things that you have to watch out for is that sneaky little Medicare, not a tax, but a Medicare premium increase. It's based off your taxes. So let's just call it a tax.
Right. Yeah, why not, right? So what are some key pieces, let's just go through that again, of a retirement income strategy, and then we'll move from there.
Well, the biggest thing is what do you have coming in on a systematic basis, right? What can you count on? So, obviously Social Security, if you have a pension, if you have any set dollar amounts, if you have any monies guaranteed from an insurance company that's coming in on, a monthly basis. So those are things that kind of give you your baseline pay, right? That's kind of like your main income. And then, most people usually have a gap, and that gap is how much money do you need to make that monthly income that you need. And so that's going to be coming out of wherever else, right? Your investments, your savings. And so, you need to know how much is that fixed amount. And then you need to know how much is going to be coming out from, other sources and which sources those are. And so that's one of the key things that you have to be, really knowing and, having that information, knowing, will your money last? Are you paying too much in tax? Which ones should you take money from? How do you get Social Security? Those are all items that are in our toolbox. And so that's a digital toolbox that's free to download. If you want to get access to that toolbox, it's pretty simple. All you have to do is text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184. Or you can download it directly at wealthcreatorradio.com.
And again, you're listening to Wealth Creator Radio with Eric Heckman. I'm Lou Ann Fulmer. Eric and his team are here to guide you with all these confusing and questions that we have about retirement. We're all bombarded with. He and his team can explain it to you in a much easier conversation, and they are offering a chance for you to go in and see them. So take them up on this. All right, let's talk more Social Security now, because it is one of the pieces of our retirement income puzzle. Tell us how you help someone decide when it makes sense for them to file. Don't do what your neighbor is doing or someone else at work is doing.
Yeah, well, so one of the worst things out there, and a lot of financial advisors, sadly, even use these type of tools, is that they'll look at these numbers of, hey, if I start Social Security at 70 versus 67 or 65, whatever the, other date is, somewhere in my late 70s, early 80s will be when it would have made more sense to, wait. And so, okay, because of that, I should wait. Well, okay, what's missing there, right? Well, what's your health status? What are your other assets, other things? Are you really going to wait to retire? Or you're talking about just not having any money for quite some time while you're retired? Because you can do that. You don't have to have your Social Security turned on to retire. I find 65 is still the number one age for people to retire, mainly because of Medicare. But lots of times now it's 60 in your 66s or 67 is full retirement age. But what happens to your other assets, right? So if you go to retire and you don't want to turn on that Social Security and say you're going to wait till 67, so that's 2 years of not getting that $2,000 to $3,000 a month. Well, if you add that all up, that could be a lot of money that's now having to be drained out of your other accounts. So the fallacy of that whole let's wait and then here if I waited here versus now is people forget about your other assets. So the only way to ever decide on Social Security is to have it inside an income plan. Because I can tell you easily which way works for your situation. If you have it inside an income plan, I can say, here, at age 80 or age 90, this is how much money you have. And if you do it this way versus this way, which one gives you more money when you're 80 or 90? Not from Social Security, but overall, in terms of your overall assets. Because if one ate up a bunch of assets and you have almost no money left just to wait to have a bigger Social Security check, and then your car breaks down or your house has a problem and you have no money because you only have his Social Security checks, right?
Yeah.
Yeah, it's not too good. So I find that that's the biggest thing that people need to do is really figure out, how does it go in your income plan? What's the best way to turn on that Social Security?
What do we need to know about other common sources of retirement income other than Social Security, Eric?
Yeah, well, having that Social Security income obviously is a big part of it. Lots of times people say, "Oh, it's not that much." It can be a lot of money, right?
Yeah.
So that's good, but it's not going to be enough. We all know that. And so, say you spend $8,000 a month in retirement, and you've determined with Social Security between you and your spouse, you're going to get $5,000. Well, that means you got a gap of $3,000. Well, do you want to just have that all on maybe money? Maybe money's like it may be there, it may not.
Yeah. No.
Maybe stuff's not the fun way to retire. That's the way to freak out your life, pretty much.
Yeah.
So we like to have it where there's a little bit more higher confidence. So if you could add some guaranteed foundational stuff, is that from a bank? Is it from an insurance company? Wherever. But if you know that you've got 1,000, 2,000 more coming in, now you barely have to get any money from your assets. So the market conditions aren't going to be as critical for you, in retirement. But that's the mistake people make, is they don't think about that. And then they retire on this hope, and you hope you hope everything's going to happen, but it may not. And then what happens? Well, there's not many options if you're 85 and almost out of money. So, again, these are things that we need to be thinking about, and, really having a plan, having that written income plan that says, hey, here's with inflation, with taxes, with everything calculated in, am I going to be okay? And it's easy answer, yes, no, or you'll be okay until this date, right?
Yeah.
But again, at least now we've got time to fix it. So if you want to get some more information, if you want to have some stuff, will your money last as long as you? Are you paying too much? Social Security decisions, all these things are great quick reports that we have, really easy to read. They're in our digital toolbox. That's our Wealth Creator toolbox. Again, it's something no cost to you. All you have to do is text the word toolbox to 800-454-1184. Again, text the word toolbox 800-454-1184, or you can download it directly at wealthcreatorradio.com.
How can we keep from accidentally triggering higher taxes in retirement? That's next with Eric when Wealth Creator Radio continues.
Do you know whether your retirement plan has any weak points? Discover ways on giving your financial future the proper tune-up. Simply go online to wealthcreatortoolbox.com to gain a better understanding in taxes, Social Security, and other ways to manage your portfolio.
And that's how it's done.
That's wealthcreatortoolbox.com.
You're listening to Wealth Creator Radio with Eric Heckman. Eric is offering to help you create a retirement strategy. So many retirees don't have one as they're heading into, a most important time of your life where you're not going to be working anymore. He and his team at Heckman Financial are here to guide you so you can have a remarkable retirement. So we're talking today about how there are so many moving parts when it comes to preparing for retirement, so many decisions that can impact each other. And Eric, you could say that retirement planning is almost like trying to figure out a Rubik's Cube, right?
No, exactly. There's a lot of things going on, a lot of pieces, and a lot of stuff a lot of hidden gotchas that those just online calculators and other things aren't smart enough to figure out and do. And, so that's why I think people really need help knowing how to navigate to how to get this money back out. It's one thing to have it grow, but taking it back out, there's so many more issues.
Right. And that's why I'm so happy we do this show, just for all of us to learn. When we have knowledge, then we're going to feel better and we'll make better decisions. All right, so we've been talking about, taking Social Security, what we need to be doing to try to claim it at the right time. But for those people who are taking Social Security, they have to start thinking about those required minimum distributions, right? And the impact can be what is sometimes called the tax torpedo. I want you to explain that. How can we keep from accidentally triggering higher taxes?
Yeah, so the tax torpedo is this kind of funky spot in the tax code that first came out in the 80s when they said, we're only going to tax 50% of your Social Security. And then in the 90s, we're going to only tax 85% of your Social Security. It's like, okay, at least I haven't gotten to 100 yet. But one of the super sneaky things they didn't do was they never adjusted any of that for inflation. So whoever was, quote, wealthy in the 90s, that's a couple making $34,000 or 50%, and then $44,000 at 85% of their Social Security, then gets taxed. So what's this tax torpedo? Well, basically what we're talking about there is, say, you got Social Security turned on, you're living on savings initially, so you're almost in a basically zero tax bracket, and then you take out $5,000 to go on vacation out of your IRA. Well, that $5,000 may have now gone from zero tax on your Social Security to being now 50% or even up to 85%. If you took out 10 or 15, for sure it would get you up to 85% of your Social Security being taxed. So that's all of a sudden, if you look at the tax rate, because all that income wasn't taxed and you just took out that little bit of money and it caused all of your income to be now all of a sudden taxable. That's what they call the tax torpedo. So again, something that you may or may not hit. Maybe you need more money out of it than that, and you're over the Social Security taxation. But a lot of times, if you structure things right, you can actually live at least a few years early on in retirement pretty tax efficiently, if you don't screw up and get hit with a tax torpedo.
Right, that's why we need guidance, So let's talk about how we can have more control over the income taxes that we pay in retirement based on the way we take income from those retirement accounts.
Yeah, really the best way to kind of conceptually do it is think about, you've got three different buckets. So a lot of times, actually, in my live events that we do, I'll actually bring out some buckets, and think of the three types as one's taxable, meaning every year you have to pay some tax on it. So that'd be savings accounts, money markets, mutual funds, things like that, brokerage account. And then you got the tax deferred, which is like your 401ks, IRAs. So these are stuff that you don't pay tax on until you take it out. And then lastly, you got tax-free. Tax-free is stuff like Roth IRAs, specially designed life insurance, things like that. So the sad part is in our live events, usually we bring out the big bucket. And what's the big bucket? It's always tax deferred. 401ks, IRAs, all right? That's where most people's money is. Usually around 70 to 80% of their money's in there. And they may have 10 or 15% in the taxable. And then we usually bring out it's almost a shot glass, kind of a red Solo cup shot glass. And that is how much most people have in tax-free, which is really sad, right? Because tax-free is obviously by far the best.
Of
and
course.
So one of the things to look at is how can you, before you get to retirement, get more and more money in that tax-free bucket? How can you get that bigger? Because then you get all sorts of control over your taxes. But if you haven't done that and you haven't done that advanced planning and you're in retirement, well, now it's okay. How much should I take from which, and what's my tax situation going to look like? Am I going to hit those limits where my Medicare premiums start going up higher? Am I going to cause other things to be taxed? Am I going to hit with the tax torpedo? Only way to do that is you do that planning either at the very end of the year or the beginning of the year to figure out which buckets you're going to take money out of. The problem is if you try to do that in February and April when you're reporting on your last year's tax return, too late. You already took that money out. And so if you find out that messed you up, there's nothing you can do, right? So really what we need to do is we need to make sure you plan that ahead. And that's the biggest problem. So one of the things we did set up is a lot of information online in our Wealth Creator Toolbox. That Wealth Creator Toolbox has stuff on Social Security. Are you paying too much in taxes in retirement? Will your money last? Finding the right balance. And even some chapters of my book, Worry Less Wealth. You can even set a time to talk if you want to set up a 15 to 30 minute phone call there. So again, if you want to get that Wealth Creator Toolbox, all you have to do, super simple, text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184, or get it directly at wealthcreatorradio.com.
Eric, tell us how you help people avoid making a misstep with their retirement savings.
Well, I mean, this has been my life's work for the last 30 years is trying to figure out what's the best way to do this. What works, what doesn't work. The biggest thing I've determined is the thing that does not work, and sadly your 401k forces you into this mode, is having 100% of your money in stocks and bonds.
Okay.
It just doesn't work because we all know every decade there's going to be a couple bad years. Now, on average, 2 or 3 of them. So if you're going to be retired, hopefully for 3, maybe even 4 decades, you're going to have a lot of those bad years in there. And with those bad years come, you need to have some stuff that doesn't drop with the market. You need to make sure you have some money that's always going to be there. So first and foremost, you need some foundational money. You need some money that's guaranteed from loss, but still earn some good earnings and still has some good growth. But that money is going to be there for the rest of your life. You can take money out and not have a loss. And there's great insurance products that do that. You could even do it with banks if you want to, but there's some great tools out there that can help you do that. And so in those bad years, like in 2022, that's what we did for a lot of our clients. We started taking money out of those accounts. We did not take it out of the market stuff, so that way it gives the market money time to bounce around and go back up as it does over long periods of time. And then in between that, you want to have some steady income money, some stuff that's very low volatility, but pays really good dividends. Ideally, dividends at least on quarterly, if not monthly basis. And these are things that are not bouncing around, up and down 20% per month or something crazy like that. Mm-hmm. These are very, very stable, very low volatility stuff. And so between having that foundational and steady income money and the market money, I know our planning works. It's worked for the last 30 years for our clients. We've had a lot of clients that have been really, really appreciative that we've been able to be here, help them, guide them to that retirement, through it. And things change. I mean, I was just meeting with somebody who she's been retired for almost 15 years, and she's her monthly budget's almost double what it used to be because of inflation. And guess what? My income plan showed that would be the case. So we can go back to that old income plan and say, yeah, this is exactly what we planned for. And so we know it works, but you have to have a plan. And if you're doing this on your own, well, you only get one chance at it. And if you screw it up, it's pretty bad because it's the only chance you get, right, to retire. That's why you want to have somebody here to help you. So again, if you want to get access to some of our great digital tools that we have at the Wealth Creator Toolbox, all you got to do is text the word toolbox to get all those wonderful reports, our copy of our book, and even if you want to set a time, again, text the word toolbox, 800-454-1184. Again, text the word toolbox, 800-454-1184, or book directly online at wealthcreatorradio.com.
Still more to come with Eric Heckman of Heckman Financial. We'll be right back.
If something's worth doing, it's worth doing right. There's a particular time of life this phrase couldn't be more appropriate. How can you know you'll live the retirement you've always imagined? After all, life can be so unpredictable. You've worked hard and saved. Watch your accounts go up and down with the market. Your advisor says, don't worry, you'll be fine. But you still don't feel confident. Eric Heckman at Heckman Financial has a checklist to help you find out if you're on the right track for retirement. Take his checklist challenge. If you can check all the boxes with confidence, you may be ready for retirement. If not, Eric can help you address any potential costly mistakes. To get Eric Heckman at Heckman Financial's complimentary checklist, call or text LIST to 800-454-1184. See if you've got it right. Take the checklist challenge today. Call or text LIST to 800-454-1184. Firm offers insurance services. Investment advisory services offered through Heckman Financial and Insurance Services, Inc. Investing involves risk, including the potential loss of principal.
Welcome back to Wealth Creator Radio. This is Eric Heckman of Heckman Financial. And I've got one of my monthly contributors here, my expert on reverse mortgages, Marilyn Brown-Ross. Good to have you here.
Good to be here.
So, reverse mortgages, again, it's a great way to get some money out of your house tax-free, makes you not have to spend down other assets, cash in other assets. You don't have to go sell your house and find new neighbors or go live someplace where there's bugs and humidity and all that stuff, right? The stuff I don't like. I don't mind visiting those places, but I don't know if I want to
live there.
I don't know if I want to be at 120 degrees with almost no water in Vegas or something, right? Yeah. So
exactly.
In terms of the reverse mortgages, I know they've changed in some of it's like the main program. I mean, it's got almost a cool name, the Heckam, but not quite as good.
Not quite
as Heckman, but
right.
Yeah.
The Heckam it stands for Home Equity Conversion Mortgage. And when I started in this business 17 years ago, there's a max claim amount on the Heckam, which means whatever the government sets that number, you only get a portion of that depending on how old you are. So
kind of like the max equity or max value of your house. I guess
it was like 250 some thousand back then. Today it's 970,800.
Wow. Yeah.
So it went way up.
But it's almost getting up to barrier standards.
Yeah. Well, then there's the jumbo. Honestly, I've been in this area. It's mostly jumbos because the jumbo, anything over $1 million, sometimes it'll work depending on what the client needs. Sometimes the Heckam is okay, even if the house is $1.5 million or $2 million, because they don't need that much money.
Yeah, if they got a $200,000 or $300,000 mortgage, then you don't need that.
So it depends. I always do, an analysis for each, and I'll show each one. I'll show the Heckam, what it will do. I'll show the jumbo, and the jumbo goes up to $4 million. So I think it's actually, I should know this, but I'm pretty sure I just saw something that they raised that also. So, and the younger you are, the less money is available.
Yeah. So you get a percentage of that. So you typically have to be 62, although you said there is some little.
Well, that was for the Heckam.
For the federal.
But they take your age, and you could have two homes next door to each other exactly the same. One owner is 62, the other one is 85. Well, the 85-year-old is going to get a whole lot more money than the 62-year-old. That's just how it's based.
Mainly because they're pretty sure the bank might get the money back sooner.
Exactly.
Yeah. So.
But so that it's all, I do that analysis, no charge, of course. And my motto is I do it, I give it to you. If you like it, great. If you don't, That's okay too. I'm not the person that's going to call you every 5 minutes. I get calls from so many people. Oh my God, I talked to this person and they're calling me 5 times a day. I don't do that.
Oh, geez, yeah. Those 800 numbers, those TV show, the old ex-famous person who's, pitching you on whatever these things are.
And I just say, hey, here it is. Let's go over it. I go over it. I like to meet in person if the person is willing. I think it's just, I like to see them. I like them to see me and, set the stage. But I'll leave it to them, all the different scenarios I've done. And
you also meet with like the adult children too.
Absolutely.
To see,
if they say my children want to meet, absolutely bring in whoever you want.
Yeah.
Doesn't matter. I like it when they do because they have questions that I can answer. So yes, I have any of that.
Yeah. Well, and also, I mean, one thing that, people don't always think about is, I had a client who, she inherited her mom's home. Her and her sister, I should say, it was like $2.5 million, right? No tax. Mom had paid $40,000 for that house in Sunnyvale, way back when, right? A couple of years later, she sells her house. She owes, several $100,000 of tax on her own personal house, right? And why is that? Well, that's the step up in basis. So the step up in basis was threatened, but didn't go away. And so one thing that people don't always realize is they say, oh, well, I don't want to take a reverse mortgage out because I want to leave more to the kids. Well, if you go sell the house and you pay a couple $100,000 or $500,000 or more in taxes for the capital gain,
less for the kids.
Less for the kids. Yeah. It'd be better to take 200 or 300 or whatever you needed to keep living in that house or to fix it up or to pay off that mortgage and then leave that asset now, tax free to the kids. And of course, they can turn around and sell it tax free, or if they want to move into it, all that stuff. But the reverse mortgage, I think, is kind of a great tool for that, right?
It is.
And I know you've had cases where people have done that before, right?
Absolutely. Yeah. Absolutely.
Yeah.
It really does work well.
Yeah. And then, I know lots of times, I think you usually say, was it almost a third or maybe half the time it's medical related, unfortunately, right?
Yes.
That they've got maybe somebody wants to stay home and have somebody take care of them.
I'm working on one right as we speak. And it's been a challenge because we need doctor's letters. They need to and she's incompetent. I'm working with the son. He's the power of attorney. Mm-hmm. So everything has to be in place because they look at every little thing. And we're just coming to the end. The doctor, we had to have 2 letters, one saying that she's incompetent and it could have been 1 letter, and one stating when she became incompetent because the power of attorney was signed in 2016. Well, if she became incompetent in 2015,
it wouldn't work.
That wouldn't work. So we've gone through all of that. So we're down at the last stage. Now the doctors wrote the letter, but they didn't sign it. So I've got to get it signed. Jeez. But we're at the end. So it's
and so basically now the son's going to have the money to take care of mom and keep her where she wants to be.
Yes.
And
Mom had said to him all along, please don't, if I become incompetent, I really want to be in my home. And he said, I want to abide by what my mother wanted. So they used up all her money. The house is free and clear. So now she's got a nice line of credit. I know she's old and whatever. He said, I don't care what's left because this is my mother's wishes. This is her home, not mine. She took care of me and I'm going to take care of her with what she wanted. So it all works out great.
Yeah. I mean, can you imagine how awful that'd be if they had to sell the house and go against her wishes, kick her out to some facility or something. And then, of course, the worst part, pay all the taxes, which is awful.
Absolutely.
Because, I mean, at least he'll, when he does inherit whatever value's there, it's all tax free, and then he can pay off that mortgage and
be done. So it's really nice for seniors.
Yeah, and so so some of the things, like you said, you have to be 62, and it depends on the
program
age and the program and how much you get and stuff, and obviously that's one kind of maybe not as nice reason. But, the other thing too is I remember years ago I had a client that unfortunately passed away now, but they lived in the place 45 years and they had a wall heater. I'm like, well, come on, just get central heat and air. You're here all day long, and so they finally broke down to do it. But there's a lot of people that they want to do some improvements, and then they're like, oh, I don't want to spend money. And
Right.
yeah, but if you've got that money, I mean, I know you've done some where people
very much
some remodels, right?
Yes. Oh, yeah. They need to remodel. We've lived here. Now we need to redo the bathroom mainly because we need he's wheelchair.
Oh yeah, bars and all that stuff.
Yeah, all the bars, and we want to just get that redone. Make it easier. Life is short. We have to make it as easy as possible.
Yeah. So so that's a great way to get more money and again, not have to sell assets, because maybe they even have the money someplace, but that may cause them a lot of taxes. Or if it was all an IRA and they had to take a ton of that out to pay for that remodel,
Absolutely.
they might jump up multiple brackets and be super expensive. And so there's lots of different uses, but probably the one I always like is because it is so much nicer to see the smile. So maybe why don't you tell me the story about the lady who wanted to see her
She
helping.
wanted to see. She was 9. Oh, this has been a while back.
Yeah.
And she said, when I die, I'm not going to get to see what the joy that not that they're going to be happy that I died, but what I want to leave them, and I want to see it on their face. So it was her 90th birthday, I think, and she did a reverse mortgage, and there was 9 grandchildren, and she gave them each $10,000. And she said, that's what I want. I don't want them to get it when I die, and I don't get to see how happy it's going to make them. She had a big party up in San Francisco at the Fairmont and handed out these checks to her grandchildren. And it was just she was thrilled. It made her the rest of her days. I mean, she's gone now, but she said, that's what I want to do. I want to see their happiness. And that's great.
Yeah. And also, if you think about it too, if she helped them 5 or 10 years later and they got the money, well, they may have been able to get that house, or they may have been able to invest that money or do something else. So that money now also, by getting it to them sooner, if she didn't need it,
she did the reverse. She didn't have it. She said,
well, that's true. She didn't even have it.
She didn't have it to give. So it was all in the house. And she said, I'm going to take it out. I want to see what it looks like to give it to them.
Yeah. So she took it out tax-free, gave it to them tax-free.
Right.
And
they were thrilled.
They're all being helped immensely by that. And
Absolutely.
Like you said, she got that nice smile and the nice feeling of being able to do it. And while she was there.
While she saw it. Yes.
Yeah. And of course, they still get the house tax-free when she passed away and stuff.
That's exactly right.
Yeah. So if somebody wants to, really kind of figure out their situation and get some help from you, what's the best way for them to get a hold of you?
Call me, 408-722-0010.
Yeah, so you can call or text, right?
Either one.
So why don't you give you that number out again?
408-722-0010.
We always have a link actually at wealthcreatorradio.com also for that. So if somebody wants to email or reach out to you. But it's great having you on, and thanks for educating people. And with that, we'll be right back on Wealth Creator Radio.
Great being here.
Become a wealth creator today. Text VISIT to 800-454-1184 to schedule your 15-minute call with Eric and his team. That's VISIT to 800-454-1184.
Hi, I'm Lou Ann Fulmer here with Eric Heckman, president of Heckman Financial, who is right here in Silicon Valley helping retirees with straightforward advice on how to plan for a secure and a comfortable retirement. Now, Eric, I know that you have been dealing with retirees for the past 30 plus years. And so, every week on our show, we also try to get some input from you from what you've seen, what you've experienced with your retirees. We often talk about challenges and risks that exist in retirement. And so thought it'd be good today to just have you give us an example of someone who's experienced a retirement obstacle. We call it a financial fail. So tell us about it, please, Eric.
Yeah, well, this is a gentleman who he came to us, and we were trying to help him out. He'd been retired, had to go back to work. He retired early on, and then realized he was, after the fact, spent a lot of money, a lot more money than he planned, because we retired earlier, right? So he had higher medical costs, he had lower Social Security income, all these things. And, now he's trying to rebuild And, that's really tough to do that after the fact, because he's already locked in this lower Social Security income for life. He's already seen, how expensive things are, but he didn't have a plan to do it in first. And, I see this with a lot of people where they just go off and they don't realize that, they say, oh yeah, you can, you're going to only need X dollars for the rest of your life. Well, you usually have those bucket list items, right? Those fun things, especially during COVID. A lot of people weren't able to do them, so that bucket list kind of got longer because they weren't checking off things, right? And so there's certain things you can do. I mean, obviously having that income plan, knowing what expenses, having somebody review all that's, I think, probably simpler to do, because it's just, hey, sit down with somebody, go through that income plan, and then check on it every year. In retirement too, you can't just
Right.
set it and forget it type of thing. No, you gotta check in every year to see how things have changed and see how things are. There's one theoretical thing of how much I was going to spend. Well, here's how much money I have left, and did you spend that much or more? So those are the things that you really want to be looking at. And then also, for anytime you have any large dollar amount in something, if it's a stock or whatever, you can put usually stop losses on that. You can have things where they sell at a certain level and bail out. So, again, have a plan is where this all sadly comes down to. I know it's boring, but that's what it's all about.
But it's the truth, yeah.
So, if you need to get some more resources, you want to get a little bit more information, you want to educate yourself, you can get my book, you can get a lot of great white papers about Social Security, how not to run out of money, all these wonderful tools that we have built up at the Wealth Creator Toolbox. All you have to do is text the word toolbox to 800-454-1184. Again, text toolbox 800-454-1184, or download it directly at wealthcreatorradio.com. That's all for this week's show. Thanks for listening. Talk to you next week.
Information provided during Wealth Creator Radio is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Individuals should thoroughly review the contract for specific details of the product features and costs. Income payments and withdrawals from deferred annuities are generally taxable as ordinary income in the year they are taken. Eric Heckman offers investment advisory services through Heckman Financial and Insurance Services, Inc., a registered investment advisor. Any tax advice given as part of this presentation is not intended to be used and cannot be used by the taxpayer for the purpose of avoiding tax penalties or promoting, marketing, or recommending to another party any matter or transaction addressed herein. The views and opinions expressed in the program are not necessarily those of the radio station or its sponsors, and they should not construe as legal, tax, or investment advice. You should always consult the appropriate advisor before making any financial decision.